Hi everyone, so today I'm going to be doing a new stock analysis video. This is called a Nucor company or corporation. They are a steel making company. So this is going to be a bit different than what I usually do, but let's take a look. The first thing I'm going to share on my screen is how they actually make money, or what do they primarily do to generate revenue. And Nucor makes money primarily by manufacturing and selling steel and steel products. They are the largest steel producer in the United States and the largest recycler of scrap metal in North America. Their business model revolves around the use of electric arc furnaces, EAF, and mini mills, which allows them to efficiently recycle scrap steel into a variety of finished goods for various industries. So this is more of what they do, which is great to see. And if we check their Q2 earnings for 2025, their earnings were quite good. Their EPS came in at $2.60. That beat the consensus analyst estimates. There's some variation. The reported consensus estimate figures like $2.52, but mentioned when Nucor's EPS surpassed all of them, which is great. Revenue also was missed, however. 8.46 billion missed analyst expectations. This anticipated revenue figures range from 8.47 billion to 8.54 billion, which is a little bit unfortunate. But again, just to look at a few of the other key figures, this report did come out July 28th of this year. So it's a few weeks old, but still relevant. Segment performance: steel mills, 843 million pre-tax; steel products, 392 million pre-tax, increased 28%. Raw materials increased 95%. So, and then the shareholder return outlook: Nucor expects consolidated earnings to be slightly lower in Q3 25 compared to Q2. However, they anticipate stronger domestic steel demand in the second half of 2025, driven by infrastructure and technology investments. So, just a few things to keep in mind. Now, if we check their free cash flow, it is not great. So 2021 was 4.6 billion. Now it's negative 385 million. So it's obviously, it has gone down the past few years. But remember, with the steel industry, like the airline industry, it's very cyclical, right? And we're going to see this reflected here in simply Wall Street. So you have negative 385 million, like I said. And if we take a look to the future, it looks like it's going to be positive 3.4 billion. So it will probably make somewhat of a comeback, I would say, in the near future, in the next 3 years or so. And the stock has rallied as a result because of this. If we check the financial health of the company, it's not great. Of course, the cash is lower, the debt is higher, which I don't generally like to see. And I'm actually surprised Simply Wall Street doesn't list it here, but their equity is okay. But, just something for you guys to keep in mind as well. If we check my DCF is going to say it's 1% overvalued. This is based on a Wall Street forecast. If we use historical growth, which I think is a little bit too unrealistic, it's 49% overvalued. So I would probably go by Wall Street forecast on this one, because I think it's more in line, it's more realistic. Lastly, if we check Tipranks here, just give me a minute while I load it up. It's going to be a strong buy, 8 buys, I believe 2 holds. Let me load it up again. Yep. And it's going to be a little bit of upside too. It's going to be about 10% upside. So perhaps not the best time to buy, but maybe sometime in the future. We'll see for Q3. I think Q3 comes out in September and October. So we'll take a look. We'll see what's going on in the second half of this, the next 2 quarters, and see if the stock is going to do well or not. All right. Thank you, everyone.